Good day and welcome to the Q3 and 9 months FY23 call of Lakshmi Cement, hosted by PhillipCapital India Private Limited. As a reminder, for the duration of this conference, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal of PhillipCapital India Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Aman. Good evening, everyone. Firstly, we apologize for this delay, which was on account of some connectivity issues. On behalf of PhillipCapital India Private Limited, we welcome you to the Q3FY23 and 9-month FY23 call of Lakshmi Cement. I need to highlight that Lakshmi Cement is also the holding company of Udaipur Cement Works Limited, and therefore this call is also open for discussion about the performance of Udaipur Cement Works Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Bidkar, CFO of Lakshmi Cement. I would like to mention on behalf of Lakshmi Cement and its management that certain statements that were made or discussed on this conference call may be forward-looking statements related to future developments and current performance. These statements are subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. Lakshmi Cement Limited and the management of the company has no obligation to update or publicly alter these forward-looking statements, whether as a result of new information or future events or otherwise. I will now hand over the floor to the panel of Lakshmi Cement for their opening remarks, which will follow the entire Q&A. Thank you, and over to you, sir.
Thank you, Mr. Vaibhav, and good afternoon, ladies and gentlemen. And sorry for this delay, which was due to some technical problem in connectivity. And welcome to this Q3 on call for Lakshmi. You must have seen the results which were approved by the board and published and intimated to stock exchange on Friday. So without any waste of time, since we already run out of time, I'm throwing the floor open for question answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Participants are requested to use handsets for asking a question. Anyone who has a question may press star and 1 at this time. The first question is from the line of Abhimanyu Kasliwal from Choice India Limited. Please go ahead.
Thank you so much for taking my question. Am I audible?
Yes, you're audible.
Yeah, very good.
Okay. So, to the management, I would like to ask that now South African coal, it is trading at slightly better prices, around 250-300 as opposed to 350-400. Are we seeing impact on the cost side of the equation? Can we expect margin improvement going forward because of this factor? The second question is, sir, that our current capacity and capacity utilization. Just wanted a question that what is the current capacity that the company is operating at, and what has been this quarter's tonnage? And related to that is that are we expecting to see some kind of operating leverages going forward, especially with new capacity? And one more question. We were setting up high margin VAP product, RMC, AAC, wall putty. How is that going, sir? I know there were 3-4 questions together, so I would really appreciate if you could answer that, sir.
Okay, so I think first question, good afternoon to all of you. I'm Arun Shukla from Lakshmi Cement. Just correct me, I think the first question was regarding that margin improvement outlook, right?
Yes, sir.
Yeah, so as you know, I think we are through a demand month. Demand is good in the market. The last quarter and the quarter before, I think we have not seen, good price increases despite demand being good. But this quarter we do see, some kind of improvement, not, big improvement in prices or margin, but definitely I think we see some kind of, prices going upward, and hence, margin also will improve. And margin will improve a little bit better than the price improvement because of the, internal drive which we are taking on the top line and also at the manufacturing end. So I think our outlook is that, this quarter is going to be little better than last quarter in terms of margin. So perhaps I think this is first part of your question.
Yes, sir.
Second was on our capacity utilization. So last quarter, I think our capacity utilization was 77%. And this quarter, we believe that our utilization would be at about 85% plus. So that is what we see. So definitely, I think that is also will have a bearing on our margin because of the dilution of the fixed costs and other costs.
Okay, sir.
Right.
So the current capacity around 14 million tons. What are we looking at?
Yeah. So I think we do have one outsourced unit with us in Amethi, UP East. If you take that into consideration, then we are at about 15 million tons.
Okay, wonderful. So what about the additional capacity of high margin products which we were planning to work on? VAP, RMC, AC, wall putty. Would you like to provide any guidance on that or any outlook on that?
Yeah. Very good question. So I think we do have a very good focus on our value-added product, which gives us good access first to customer, directly, and also I think, entering into some areas which is a growing area in case of VAP. So just to give you a sense that we are, focusing quite a bit on RMC business, expanding it further, and also AC and putty business. Just to let you know that, RMC business, I think we are progressing very well. We do have, some model by which we are expanding our capacity. And last quarter, our sales have improved, and the total volume was about 1.35 lakh cubic meter, right? And AC block also we are doing quite well. AC, our volume last quarter was, just hold on, 1.35. No, AC block was 1. Yeah, 1.35. No, 0.36. Yeah.
So इनमें revenue क्या आ रहा होगा? What is the revenue that we are seeing?
So revenue last quarter we have achieved a revenue of about 116 crore.
From these VAP and RMC and AC?
Yeah, so this includes POP, this includes RMC, this includes AC block, and so little bit of motor as well.
Okay. And what margin do they usually operate on? 15%, 20%?
So I'll just let you know. I think in our case, the high margin business is AC block. It's about 12% margin, and overall, if you take a portfolio of RMC, AC, and POP put together, then 7% margin.
7% operating margin, 7% net margin, sir.
We are talking of operating margin.
Okay. Thank you, sir. This was very helpful. Thank you so much. I'm done with my questions.
And just to let you know, I think AC block is, I think as I told you, margin is about 12%. We have planned to grow it further. So Aligarh plant, recently we have acquired one plant and we have started, production of AC block, that, Aligarh unit in UP. And we do have, some future plans also for AC block. And going forward, our focus is going to be AC and RMC. Putty also, I think last time around we had announced that we are going to put up a putty plant. So that we have already inaugurated. That groundbreaking ceremony has happened. And probably, I think next, 6 to 9 months time, about we'll have a putty plant at Alwar in Rajasthan. So that is also going to give a good boost to our VAP portfolio going forward.
Understood. Thank you so much, sir. And all the best. Wish you all the best.
Thank you.
Thank you. Anyone who has a question may press star and 1 at this time. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Thank you, sir. Sir, before asking the question, just wanted to clarify or know, sir, when did we met the investors in Mumbai? I suppose we met in end of November or the first week of December. Is it right?
Yeah, you're right.
Sir, then how come we haven't informed to the exchanges?
Sorry?
We did not inform to the exchanges. Normally, that's the process that when corporate meets the investors, they inform to the exchanges that we are meeting investors on this day, but we haven't informed to the exchanges.
whatever presentation we had done, we have uploaded on the website of the company. So that meeting investor is an ongoing process. It just did happen that we bunched it together instead of. But whatever we discussed, that is all presented in a presentation which has been already uploaded well before the meetings with investors.
No, that is true. That normally is the case with all corporates. But if that is the process set by the either SEBI or the exchanges that we should be following. The thing is that just wanted to clarify on that aspect. Have we talk about 1,000 rupees EBITDA without increase in the realization?
Yeah. So, Shravan, I think yes. We believe that we do have scope or the headroom in improving our top line, because as you know, we are in some manufacturing costs. Our effort is definitely to work all those internal efficiency pertaining to the top line so as to bridge that gap up. And if you really look at without taking price into consideration, the EBITDA gap between JK Lakshmi Cement and the leaders is diminishing, is dwindling, right? And that is coming about from the fact that we are working internally on levers have decided that this is going to add value, right? So yes, I think whatever I think EBITDA 1,000 rupees in that was without increase prices.
The simple question right now I have is that is a kind of selected information to be shared with the investor. So that's why I am raising this point, because I don't think this is what we have discussed on the conference call last time. So the thing is that the post your meeting with the investors, the stock has seen a significant turn up and then cool off. So that's the simple point I am just trying to request you, if anything has to be said, it should be at a common platform and not to the selective investors. So that's the humble request. My question is now in terms of the needed some couple of data points in terms of the trade share, share of premium, blending share, lead distance, railroad mix, fuel mix for this quarter.
Yeah. So as we speak today, I think we are at about 54% of trade and about 6% of blended share, right? And our lead distance is 396 kilometers. And last quarter, our lead distance was 401 kilometers.
401 for the third quarter, and the blended cement you said 67%.
66.
Okay. So just a related, and the premium share you said?
Premium is about close, just hold on, is about, if you take, overall volume, then is about 11%. And if you take only trade volume, then it's close to about 25%.
Okay, 25%. So related question is that last phone call we said that we are targeting to increase the trade share to more than 60% in 2 to 3 quarters. So this time, as you mentioned, our trade share is at 54%. Last quarter also the same number were there. So just trying to understand where are we? Still we are expecting that we will be able to increase this to more than 60%. So now 2 quarter remains. If last quarter, if I include in your target of 2 to 3 quarters, so only 2 quarters left. So are we able to do more than 60% trade share in 2 quarters? And the same way the blended share where we said that we want to achieve a 70-75% in 2 to 3 quarters. We are at 66%. Last quarter was 67. So just wanted to understand how we are planning to, or are we now increasing our target time maybe by 2-3 more quarters?
Yeah, so I think good question, Shravan. I think in last call I did mention that to look at our efficiency levers. So first efficiency lever was geomix, because trade and non-trade is all about margin optimization, right? But we operate in a diverse geography wherein trade, non-trade, and even trade in different zones varies quite significantly. Just to elaborate further on this, if you take, let's say, north, I think trade and non-trade is very high, and gap is very high, as big as about 800 to 1,000 rupees a ton. But if you go to, let's say, east and west, that gap is not that much there. So one way to improve the margin is to optimize the geo mix at the top level. So that means that in geographies where non-trade is better than the trade of other geographies, I think that is what is going to be my preference. And I think I mentioned last time, I remember very, very clearly, at first level of geo mix, level of optimization is geo mix. So sell more in the area where we have better margin, one, and the second level thereafter goes is trade and non-trade, right? Just to clarify that one. Second, I think 60%, that is what we are going to achieve this next 2 quarters. That is what the endeavor and effort is. But first and foremost thing is, of course, geo mix optimization, right? Blended also, I think we do have a target of, taking it to 65%. We are there at 66, 67. And I think we are working, the way we are progressing, I think I am quite, okay, because, the first level is geo mix optimization, and second comes, trade, non-trade, and blended, right? But I think that is what our, the target is, achieving close to 75% of blended and 60% beyond trade.
Okay, got it. Last, in terms of the fuel mix and the power and fuel consumption cost for this quarter, sir.
Okay, I'll just note.
Fuel mix in this was coal 37% and pet coke 48%. And total cost in this in terms of kilocal was 2 rupees.
257, I think.
257.
What was in the Q2, sir?
Come again, Shravan. What you asked?
257 kcal cost you said in the Q3. What was the same number in Q2?
2.52, and overall group is 2.57. Overall group is 2.57.
Yeah, so this is for third quarter. What was the same number in Q2 FY23?
Yes, 230.
230. How do we expect the same in this quarter?
It will be flattish. Same.
Oh, okay. And in terms of the date, gross debt and cash, and the deadline for the Udaipur expansion remains the same, March 24. How much capex we have done, and what's the number we are looking for this fourth quarter and the next FY24?
The deadline remains the same, which is March 24, but it may spill over to the first quarter of FY25. That is number one. And number two, regarding our long-term debt, on a standalone basis, we have at about 850, and net debt is about 100 crores. On a console basis, the total debt is 1875 and net debt is 1225.
Sorry, net debt is?
1225 on a consolidated basis.
1225. And in terms of the capex, what is left in the fourth quarter and FY24?
As far as JK Lakshmi is concerned, we are not doing, having some projects, we are not doing any major.
At console level, sir, I'm asking.
On a consolidated basis, we have about, we have already incurred about 700 crores out of 1650 up to December in that. And another 150 to 200 crores will go in the current.
Okay. Thank you and all the best.
And, I would just like to clarify, when we had met the investor, we did not discuss anything new other than what was already talked in the conference call, which was held immediately after the results. So nothing new which we have Whatever presentation was there, that was in public domain. Other than that, nothing was discussed.
Thanks for the clarification, but the thing was, initially sir mentioned that in terms of the 1,000 rupees EBITDA per ton without realization growth, so that is an important aspect. So that's what I was just trying to and request that we should be disclosing in the at an open forum like a earnings call and not to the selected investors. So that's the only simple point I wanted to highlight.
That was also highlighted in the last con call, that how we are graduating and bridging the gap and trying to reach to 1,000 rupees. Same was this investors when we met in Cement.
Okay, sir. Thank you, sir.
Thank you. Anyone who has a question at this time may please press star and 1. Next question is from Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Hello, am I audible?
Yes, you're audible.
Yeah, so first of all, on the housekeeping, you said that the non-cement revenues for this quarter is 116 crore. Did I get it right?
Yeah, you are right.
Right, you got it right.
And how much is the RMC revenues for the quarter?
RMC is about 56. 40 crores is AC block. COP is 20.
56 crore is the RMC. Sorry, I couldn't hear after that. AC is...
The AC is 40 and 20 is BOP.
Okay. And on a non-cement revenues, they are making around 7% EBITDA margin.
Yeah.
Okay. Sir, on the capex front, you mentioned that the console basis you have incurred around 700 crore in the 9 months.
No, I said on that project of the 1650, we have incurred up to December 700.
700 crore. So because why I'm asking this, the September quarter half yearly balance sheet suggests that capex spend in till first half was around 330 crore. So we have incurred another 400 crore in the third quarter. Is that understanding right?
What was the third quarter, sorry?
No, September 1H till September, the capex spend on a console basis appears to be around 330 crores.
That would have been only for the current 6 months. No, but 700 crores is the figure which I have talked of on that project of 1650, a portion of which would have also been incurred before March 22, no? You can't link
I'm in the cash flow statement, sir. I'm referring to the half-yearly cash flow statement.
That is what you can't link the cumulative figure up to December with a cash flow of 6 months and adding there to the remaining capex. Many additional capex in this quarter was only about 250 crores.
Okay, so 250 crore is the incremental. And for this fourth quarter, how much incremental capex expenditure you are looking at, sir?
Another 200 crores incurred on that. 200
crore. And so that would work out to be around 700 crore for the full year. And next year, how much you are guiding, sir? Cash flow basis?
It would be about 700 crores on a consolidated basis, including the remaining part of the project and also the bit on the normative maintenance.
Right. And sir, I heard your CNBC comments also today that you're looking at 12% volume growth for this year, which primarily means your cement volume growth. But if I look at cement plus clinker, you would be doing around 6 to 7% growth on a console basis.
I think we have decided that clinker, we are into cement selling business, right?
Right.
Clinker is, I think we sell little bit, based on again the opportunity which we have, where we have a good margin and that makes sense, business. Otherwise, we are primarily focused on cement and will continue to in future.
Okay. No, I'm asking is for next year, until this new project gets commissioned, what sort of volume growth on a console basis one should factor in? And would you, for your Metha, the on-lease grinding unit, would you need to take clinker from market also to drive growth?
No,
should you
I
be
think
purchasing?
Next year, I think we are looking at anywhere between 12 to 15% growth, right? That is what we are looking at.
Like only on cement you are saying, right? No, I'm looking at on the total base, cement plus clinker.
Cement. So I think let's now on consider growth in cement.
Okay. So incrementally, your clinker sale will meaningfully reduce because you will be converting it into your own cement, right?
Right.
Okay.
And I'm telling for MAT, we do have clinker with us as of now, because that we can supplement it from our eastern clinkerization.
So for next year also, you don't require additional clinker from outside. External purchase is required or not for this growth of 12% that you are targeting on cement?
12% is all internal without dependence on clinker buying.
Okay. And sir, this sequential increase in your cost, is it because your cost base was lower in Q2 and that is why Q3 you have seen a 2.3 to 2.52 or jump in the cost, and so now from 2.52, how are the cost numbers looking in Q4?
Q4 will be flattish around the same level. Q2 was, you're right, lower at 2.3. So it will be flattish. So it has peaked out.
Okay, it has peaked out. But incrementally in Q1 and all, are you looking these numbers to come down meaningfully closer to 2 rupees on current cost trend basis?
2 not come. That will 2 rupees means a reduction of 20%. That is not good. That is what has happened. Marginally, it will come down in the first, but really not to that level as 2 rupees per.
Okay. Because then the console, we also see a freight cost for all the players. They have shown an increase. Railway, busy season charge getting introduced, and many players talking this will now remain a full year phenomena rather than a quarterly 1 or 2 quarters. So for you also, the margin levers here on Q4 and all could be restricted because you're not expecting fuel cost savings, and realization improvement is also not great so far for all players.
Yeah, you're right, realization. Our internal efficiencies will drive the intended.
Okay.
Because
and so this,
not.
And one last, correct. The last question on this 40 megawatt, the solar power supply. This is on the consumption basis, or this is 40 megawatt capacity which you have tied up? I mean, PLF being 20%.
40 megawatt of capacity which we have tied up is on a out model in which we are investing about 26% equity.
Okay, so effective.
Yeah. Only advantage is that in Chhattisgarh state they allowed the banking of the power.
Okay.
So you can because power would be produced in a limited period of time, and then we can use it.
By when this project would be ready, sir, and how much equity you are infusing for 26%?
For 26%, we are inducting about 22 crores, and it should be ready by the fourth quarter and financially.
Sorry, fourth quarter this year itself, by end of March?
Yeah.
Okay, and what cost you will be sourcing power from this unit?
We will be getting effectively lended to us at about 5 rupees to 5 rupees 60 paise.
Sorry, I missed. How much?
Sorry.
Hello, your voice is not clear, sir.
It's 50 paisa per unit lended to us. 5 rupees 50 paise. Is it clear? Is it audible?
Yeah, I got it, sir. Yeah, thank you, sir. That's all from my end. We'll come back.
Next year. Yeah. This is FY24 quarter. FY4 quarter 24. I would like to clarify.
Okay, sir, thank you.
Tax will be in March 24, not 23, but 24. Right?
Understood, sir. Thank you.
Yeah.
Thank you. Anyone who has a question may press star and 1. Next question is from Prateek from Jefferies. Please go ahead.
Hello. Yeah. The question is on your renewable power mix. So we have talked about in the press release that for Eastern operation we're looking at 80% renewable power mix.
So can I request you to please use the handset? You're not audible clearly.
Hello. Yeah. Is it clear now?
Yes, please.
Yeah.
Yeah. So my question is, in the press release, we have talked about 80% power mix in Eastern operations as renewable power. We also have this captive power, right, on the Eastern operations. So what happens to that once we have like this 80% renewable power mix?
Obviously, we'll not be using that because of the exorbitant coal cost, and 80% should be drawn from renewable. We may not be required.
Yeah. So we will be selling off that plant, or that will be like.
We'll take a call at appropriate time. Too early to let the project and we start using it. We also have plans to expand there. We'll see. It's not that immediately the sell off the TPP.
Okay. And just for clarification on the consolidated capex of this year and next year, we are looking at around 1,000 crores this year and 700 crores next year on consolidated basis.
Current year, we are talked of about 750 crores, another 750 next year.
So 750 and 750, this is including UCW and standalone operations combined.
Yeah. Okay.
And FY25 also has this impact of capex of UCW?
Marginal, maybe margin, 100 to 200 crores, depending on when exactly we close that project.
Right. And on pricing, sir, you mentioned that there is no change in pricing of late. So are we or as an industry is looking at like hikes post March, like financial year end, or that is also like looking out of question now?
So I don't know about the industry, but I think demand and supply is going to really decide this, and probably I think prices may go a little bit further up. Much is what I see. We'll try to take price increase, and I'm talking of JK Lakshmi, talking about industry what they're going.
So we are losing your audio, sir. Sorry, we couldn't hear that.
Be audible?
Yes, sir.
So prices will inch up, little bit, this quarter and in coming quarters, right? And we'll, try to attempt a price increase. And I'm talking about only JK Lakshmi, not talking about industry, what they are going to do. But, based on the demand supply situation and our position, we'll try to take in.
Okay. So when we talk about like this 1,000 rupees EBITDA per ton for consolidated operations from like, let's say, current run rate of 650, would it be possible to like sort of break it down to like internal efficiencies, including like power and fuel or logistics or geo market positioning or like whichever steps we are looking at?
Yeah. I think, 1,000 is not going to be achieved just by saying so. We do have, all those granular planning in place. First element of manufacturing or supply chain or top line. We do have granular details as to where we need to work and how much time it's going to take to implement all those, operational plans. We do have those details.
Yeah. I mean, is it possible to discuss here?
Sorry?
Is it possible to discuss on the call?
Yeah, so I'll just tell you, if you want, let's take a gap of about 300 rupees, right? So I think about 200 plus is going to come out of this top line levers improvement. About maybe 50 rupees or so will come from manufacturing and 50 to 75 rupees supply chain. In a broader way, I think this is what is the pickup is, but I think you have elemental analysis also under each is broader heads.
Right, sir. Very useful. Thanks. I'll get back to you.
Yeah,
Thank you. Anyone who has a question may press star and one. Next question is from Ritesh Shah from Investec. Please go ahead.
Yeah, hi. So thanks for the opportunity. A couple of questions. First is you indicated a sale of 117 crore for the quarter pertaining to AAC blocks, RMC, everything else. Did I hear the number right, sir?
Yes, correct.
Right. Sir, can you give the same number for Q2 and Q3 of last year, please? And the corresponding margins.
Yes, so we can give you Q2 as well. So
Incidentally, it was same. Incidentally,
almost same, yeah. Overall 160 only. Our RMC was 52 crore, right? In this quarter, the quarter which has ended is 50.
margin last quarter was 5% as against the current quarter.
Right.
Sir, I could not hear you, sir. Sorry.
116 is the current value-added product sales, which was same as in the preceding quarter. Margins have improved from 5% in the second quarter to 7% the value-added product.
And sir, last year's numbers?
Last year it was 99 crores. 99 crores in the second quarter, a margin of 3%.
Okay. So if we have to look at the cement business, would it be fair to strip down these numbers and then look at it?
Yeah, that will be the correct way of this.
No, that's helpful. Sure. Sir, my second question is the reported numbers what we give for cement sales and volumes. I think last year in Q2 or Q3 you had indicated that there was an element of double counting which we had then basically rectified. So I just wanted to check the reported number that we have for cement and clinker volumes. If you could just help us understand whether it is only for JK Lakshmi or it also includes UCW. And if you could please bifurcate it for cement and clinker for JK Lakshmi and UCW separately for this year and last year, Q3.
Q3 this year on JK Lakshmi standalone basis, we had cement sale of 24.22 and clinker sale of 1.82. That makes it total of 26.04. And UCWL, they did not sell any clinker. Their total sale was 148.
Sir, your voice is breaking. Sorry, I could not get you. Sir, hello?
Yes.
Yes, sir, your voice was breaking. Sorry, I could not get you. You said UCW, after that I lost you, sir.
UCWL was 4.48. And they did not sell any clinker. So that was their total sales. And on a consolidated basis, eliminating the inter-unit sale, total cement sale is 26.96. Clinker sale only for JK Lakshmi 1.82. So total is on a console basis 28.78.
And sir, same numbers for last year?
Last year, same numbers. JK Lakshmi was 20.96. Cement 0.33, clinker total 23.29. And UCWL 4.47, cement 0.37, clinker total was 4.84. And consolidated basis, excluding the inter-unit, cement was 23.4 and the clinker 2.7. Total is 26. On cement, there is a 16. On a console basis, there is a 16% increase, and overall 10%.
Sir, if it's possible, if you could please add this on the press release from the next quarter onwards, it will help us understand and appreciate the numbers better. So that was one request. And so last question, how should one look at the limestone lease expiries? And I understand we have multiple optionalities also on the table. How should we look at that?
For limestone, I think except Sirohi, which is due in the year 2030, I think rest everywhere, I think we are secured in terms of limestone mining leases, right? And that is good enough for a couple of decades. In case of Sirohi, I think that is going to be renewed in the year 2030, and we are hopeful that we'll be able to do that because this entire industry is going to face this issue during that time. Probably, I think that is not going to be a big issue. Rest all other places, I think we are secured in terms of which we have and in terms of years we have in our hand.
Right. Sir, is there any risk mitigation strategy if at all the Sirohi lease doesn't come to us in 2030 or if the premiums are very high? What is the plan B? That's what I want to understand, sir.
Udaipur is nearby, then we do have limestone there with us, right? So that could be one fallback option for us. And probably I think by that time Nagaur also will be ready. In case of extreme eventuality, that can also happen. I think, but that is something which is yes as an option. But I think we are confident of getting it renewed in the year 2003.
Sure. And on the growth optionality, sir, we have a couple of limestone leases which we have recently won in auctions. Can you please detail how and when will we exercise those optionalities that we already have?
Yeah, so currently we are working on Nagaur. That is what the first priority for us is, right? Which is situated in north part of Rajasthan. All those preliminary activities in terms of mining plan approval, piece of land and things like that is already on the way. That is going to be the topmost priority for us. But before that, Durg can come because we do not have railway siding. We are trying to have railway siding very quickly, maybe in the next 1.5 years time. If that happens, then probably I think Durg will come before Nagaur. We have 3 locations positions with us. Durg in East, Nagaur in Rajasthan and Kutch in Gujarat. We are at about 15 million ton as of today. 10.5 million ton will be having by March 2024 in terms of cement. But clinker we are going to have even before. At max 18. And these 3 locations will be putting up another 12 million ton put together. Our plan is to go to 30 million ton by 2003. Now the order and priorities will depend on how we are progressing at Nagaur and at Durg in terms of railways. If railway siding comes first, then Durg is going to be the priority. If Nagaur progresses very well, then that is going to be ahead of Durg. So this is what the plan is, followed by Kutch.
This is very helpful. And sir, when are we likely to decide on this incremental capital allocation decisions?
On that capital allocation decision would come somewhere in the next financial year, depending on the what is happening to our external approvals based on which project gets picked up.
Sure, this is helpful. And sir, if I may squeeze one question, sir, are we looking to collapse JK Lakshmi and UCW structure? Any timelines? I think there was a tax angle. Have we exhausted that?
No, tax angle still continues. We have been mentioning that it will take 2-3 years. But this net credit entitlement of about 160 crores, here 200 crores.
So your voice is breaking again, sorry to interrupt.
That eyebrow doesn't make it not a tax efficient merger if we do it now. But ultimately it will happen. And we exhaust that net credit entitlement. And that plan is very much there. But without merger on paper, all synergical benefits in any case we are deriving today also in terms of procurement or marketing, common top management. So apart from a collapsing of the structure and having a common cash flow, some size valuation obviously will get factored in, but otherwise most of the synergical proper paper.
So sorry to interrupt you, so we just lost you in the last minute.
Yeah, so I'm saying most of the synergical benefits in any case are being driven now also without a paper merger.
Sure, so this is quite helpful. Thank you so much for the answers. Thank you.
Thank you.
Thank you. Next question is from Kamlesh Bagmar from Lotus Asset Managers. Please go ahead.
Yeah, thanks for the opportunity, sir. Suklaji, one question on the part of last con call we had told that by the month of January we would be more clear about how much price gap we have narrowed down with the POs. So any update on that part?
Yeah, so I think we did ease our price gap with others. For instance, I think western and eastern part of India, we have reduced this quite significantly. I would say, I think where we wanted to actually position ourselves. So that I think progress is there. I would not say that we have accomplished it, but I think there we have done quite a bit. In the north, I think yes, we need to work on that further, because the progress in case of north has not been that great. But in west and east, yes, we have.
Yes, but is it more of an issue with regard to the leakage of volumes from non-trade to trade? I think that even if we see today the prices, the gap is massive, like say 30-35 rupees gap with the top players, and it's not like say your gap with the three is there or the second run or third run companies, third tier companies. It's majorly with the top players, and those gaps would remain. So why we are harping so much on the price gap side, and there could be some issues on the cost side, because like say the realizations in the case of Sri or any other player are at the similar levels, but they are much more competitive on the cost side. I do appreciate that we have worked a lot on the cost side, be it waste heat recovery or the solar or renewable energy. Where is the issue on the margin front, not on the price front, but on the margin front?
I think a lot of price is one part, and major part I agree with. And in terms of trade, non-trade, I think we have quite a robust way of checking all those things. So I'm talking of the recent past. I think we have really improved quite a bit on that intermingling of trade and non-trade. I think I'm reasonably confident that that is not happening in our, right? I'm not thinking about what they're doing, right? So in the given state or given zone also, there are pockets where you have your brand is more strong or less strong. So that also determines the price gap. But we do have a roadmap as to where we want to reach in terms of the benchmark band which we have fixed for ours, right? So discipline part, I think we have already worked. So I think I do not see much of a issue. More so with the technology in place. So I think nothing of that sort can happen. I would not say 100% sure about it, but I am reasonably confident, maybe to the extent of 90%, that is not happening in case of our case, trade, non-trade, or back unloading and things like that. It's more to do with the, kind of elevating our brand proposition and brand value itself, right? Which is a long-term thing. And when, when I was discussing with all of you, maybe perhaps, last call also, brand positioning, that takes, a little bit longer time. So this is not something which is going to give you benefit right away. So I think, yes, that is there also we are doing quite a bit in terms of, improving our brand salience. But I think much more focus is on those, initiative which is some kind of, low-hanging fruit, right? Which we can, pluck it right away. So we have prioritized our initiative, and parallel is also, of course, brand building, brand salience improvement, and things like that, right?
So honestly, like say, if you take your Gujarat market, it's a purely a non-trade market. I really don't understand that how the brand is going to give you such a big push. It may be in the east market, but not in your core market like say Gujarat. Because over the last 2-3 quarters, if you see our performance, it has been primarily because of the low-cost coal which you had the benefit. But as we move ahead, like say even in this quarter, the gap with all the peers, which was in the last quarter by around 125 rupees. Now that again, like say, widened to roughly around 250 rupees. Honestly, that has not really played out. And even if we do the channel checks, no improvement has yet been witnessed on the pricing part.
No, so price, I think positioning part, yes, of course, that's going to take time. And you mentioned about, Gujarat or West market. I think the industry structure is such that, you have, major projects out there, right? Non-trade, even in case of leaders also, non-trade portion is high. Okay, but if you see, trade and non-trade gap in case of Gujarat is the list. And that is what I think I was trying to explain. One gentleman who asked the question of, trade, non-trade, and I explained that, geometry. Okay, so I think trade and non-trade gap is not that much, right? And if you go to, other market north, I think the gap is very high. Right? So I think we do have, priority. I think price positioning is not going to really being done, immediately. That is going to take some time. But what we can do is all those, levers and matrices which we can work on. And probably I think our direction is all right. I think you mentioned about, 2-3 quarters. I think if you look at, our gap with the leaders have been the highest. if you look at 9 months EBITDA per ton of the leaders and ours, I think drop in case of or the gap which we had with them was much higher before. This year I think we have reduced this quite significantly. I think we need to really look at that. I think perhaps you missed that. You just look at that, how much EBITDA they have, their EBITDA has declined or reduced and ours have declined. I think that will give you a fair, bit of idea that yes, something has happened. That is what is giving us the result.
Thanks a lot, sir. And lastly, one suggestion, sir, which has been the common suggestion, that do give volumes about volumes in your press release. Your press release is just a statement of the revenue, EBITDA, and PBT and PAT. There is no statement about the volumes. Every company, even like say half of your size, it gives the volumes in their press release. I really don't understand, like say for the last 10-12 quarters, this would have been the common suggestion which has been made on this forum. Why that is not getting implemented? Every time we have to put up the messages or the SMS to get the volumes.
We'll see if it is feasible, we'll do. Thank you.
Thank you. Next question is from Uttam Shrimal from Axis Securities. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. Sir, my question relates to Amity grinding unit. So how that is shaping up and what kind of volume we are expecting in FY23 and FY24?
So we are averaging close to about, between 25 to 30,000 because we commissioned this, project during July and August, during this monsoon time. Our volume have started picking up. Probably, this month onward or maybe this quarter, I think we'll see an average volume of about, more than 50,000 tons. In the previous quarter, we have about, close to 30,000 tons. So that, improvement we see this.
So 50,000 per month?
Yeah, per month.
Okay. And sir, these other expenses in this quarter have been very high. So what has been the reason for that? And will this run rate will continue in the fourth quarter also?
Yeah, the second quarter we had some lower expenditure on advertising. So this will be the normative one.
Okay, so this will remain in fourth quarter also?
Yeah.
Okay. And sir, how has been our railroad mix during this quarter?
Rail is very insignificant in our case, about 10% only.
Thank you. Next question is from Ronald Sioni from Sharekhan Limited. Please go ahead.
Yeah, good evening, sir. Hello. Yeah, I'm audible.
Please go ahead. Yeah.
Yeah, sir. So, wanted to repeat the Q3 FY22 numbers. Last year's same quarter. If you can please repeat volume numbers.
Sorry.
Q3 of FY22 volume numbers. If you can repeat.
Last year.
Yeah, last year.
Last year we had JK Lakshmi a total volume of 20.96 and cement and clinker 23. UCWL was 4.47 cement and 0.37 clinker. Total was 0.84. And on a console basis, net of the inter-unit, cement was 23.4. Clinker 2.96.
Sir, we lost your audio again. Sorry to interrupt.
Consolidated 23.44. Clinker, that was cement. Clinker 2.7. Total is 26.14.
Okay. And you said JKL standalone was 20.96 and 0.33 clinker. But
2.33 clinker was 23.2.
Okay, right. Okay. And second thing was that the capacity expansion which you spoke about. So you had said 15 million ton, and thereafter you will be adding around 0.5 or 1.5 till March. So that part I couldn't get. 30 million ton was by 2030. But in between, what is the expansion plan of the company?
So 2.5 by March 2024 for that UCWL.
March 20. Okay. That part is only included. Okay. Also, the same request from me. Also, sir, if you can put the numbers in press release. I haven't received actually the email from the company with respect to sales volume. Yeah. Thank you very much.
Thank you. Anyone who has a question may press star and one. Please note that this is a final reminder for questions and no further reminders will be placed after this. Next question is from Keshav Lahoti from HDFC Securities. Please go ahead.
Hi, thank you for the opportunity. Can you mention in the call that premium sales is 11% overall and 25% of trade? Have I heard it correct?
Right, sir. Yeah.
Yeah, because the math is not working. You said the trade is around 54%, and if premium is total 11%, then out of trade it should be 20% only, which is your consistent trend of 20-21%.
I think I just mentioned, approximately, and that, does not include our maybe of trading volume. Right? Trading volume, that does not include, trading volume or the outsourced volume where from we are selling premium products. Right? I put everything together and I mentioned.
Okay. Got it. And sir, how will your non-cement revenue margin would look like next year?
I think it's going to be about, 7-8% kind of.
Okay. Got it. And this 300 per ton internal labor which you are talking about, so by when should we achieve this to be fully achieved?
Again, I think...
Sorry, I missed it.
Can you repeat your question, please?
So this 300 per ton internal labor which you are talking about, improvement in EBITDA, by when this will be achieved?
18 to 24 months, I think you can take that. 18 to 24 months.
Okay, got it. One last question from my side. So your fuel cost is not expected to cool off in Q4. Is it like you have a very high cost inventory already? So what sort of inventory you are carrying?
Yeah, you're right. We have this same cost inventory. So we will be having the same fuel cost in the coming quarter. Will start tapering down from April onwards.
Okay. Thank you. That's it from my side.
Thank you.
Thank you. Next question is from Shravan Shah from Dolat Capital. Please go ahead.
Sir, just wanted to clarify as your voice was breaking in between a couple of times. 300 rupees internal levers, you said 200. If you can break it up, 200, 50 again, if you repeat what you mentioned.
Yeah, 200, 50 approximately you can take. So 200
from
50 manufacturing and supply chain.
Sorry, 200 from top line.
Yeah.
Okay, 50 from manufacturing and 50 from?
Supply chain, logistics, outbound logistics.
Thank you. Next question is from Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. My question is, could you give the clinker production consolidated for Q3 and 9 months? And second is 30 million ton by 30, which is incremental 12 million ton capacity. What is the capex number you are factoring in for those 12 million ton?
Yes.
Consolidated clinker production in this quarter was 21.86. It includes 18.51 of Lakshmi and 3.35 of.
Thank you, ladies and gentlemen. Due to time constraint, that would be our last question for today. I now hand the conference back to Vaibhav Agarwal from PhillipCapital India Private Limited for closing comments. Over to you, sir.
So thank you on behalf of PhillipCapital India Private Limited. We thank you, Madam Lakshmi for the call, and many thanks for joining the call. Thank you very much, sir. Aman, you have concluded the call. Thank you.
Thank you, Mr. Vaibhav, and thank you, everyone. Thank you.
Thank you
Thanks,
very
everyone.
much. Thank you. Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines. Thank you.
The conference is now being recorded.
Security and sustainability. Future looks bright for water sector, and Vaibhav is well placed to be the key global player in contributing to world's water sustainability and security. Once again, thank you everyone for your participation in our 9-month and Q3FY23 earnings call. We have uploaded the analyst presentation in our website. In case you have any further queries, you may get in touch with Stellar IR advisors, our investor relation advisor based in Mumbai, or feel free to get in touch with us directly. Thank you.
Thank you. On behalf of VA Tech Vapak Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your lines. The conference is no longer being recorded.